Greetings, market rebels. Welcome to this week's sector situation. I'm Wayne. My partner Ryan's wrapping up the markets overview, market outlook for the week. It is, let's see, what time do I have here? About 3:37 p.m. on Sunday, March 12th, 2023. Let's get into things. This is going to be relatively short because, as I kind of covered to a degree in macro measure, trustee disclaimer, first of all, and trustee intellectual property rights notice. This became really a macro situation and became risk off. And you can see, we'll show how they treated virtually everything poorly. So we'll go from there. But this was what I covered in macro measure. I would encourage everyone that's interested in stuff like this to go take a look at it, because I think that's the more important one for sure this week. Because of what's going on, this makes it hard to really get a lot out of sectors. We'll still have a chance, I think, to look at a few different things. But one thing I wanted to cover just for sure is the thoughts that I've got about the pivot that bulls have been, I guess, trumpeting for months, right? The Fed will pivot sooner, that kind of thing. Everyone's at least heard that, if not seen some sort of an interview or read something about it. And just want to reiterate, right, that if this situation causes more fallout, that causes things to weaken quickly, and the Fed then begins to at least leave rates alone and then maybe cut rates in a few months, if all that is to come to pass, that's usually pretty bad news, right? Because when the Fed starts to cut rates, you can see that from this graphic that the Wilshire 5000, when you go into that recessionary period, which is really highlighted by these gray periods, that those cuts that happen in the Fed funds rate tend to happen just prior or just into the recession, sometime during the recession, and things usually roll over pretty strongly, unfortunately. So just kind of keep that in mind. And on that, I'm going to stop the share for now. We'll pick things back up once I've cleaned things up and got an outlook out of my way. So I don't want to really be stuck in outlook here. Let's see if I can get rid of that. And yeah, I don't know why it fights with me so much. But I think what I'll do is I'll get set up with our 12 chart grid, and then we'll come back and we'll take a look at that and a few other things. But hopefully we're flashing the grid right now. Everything's being recorded, I believe, as well, so we should be good to go. But right, you could take a look at a couple of things here, but even strong sectors have gotten hit. And I would point out that XLI was very strong. That was one we were looking at. If the bulls managed to somehow pull it off, kind of like disregard our macro take and just get the market running still with another probably squeeze, but we were ready for that in XLI. And the reason I bring that up is, right, this is what we've always said, that even strong sectors, even things that it seems like money managers want to rotate capital into, they'll eventually find those, come around for them, find them, and start to sell them as well. And so that's the thing, that when you get this sort of risk off that we got last week, there's really very few places to hide in stocks traditionally. They still try to. You can see that probably XLP hung on okay, but it's just very hard when everyone's sort of hitting that panic sell button, and selling begets selling, just like buying begets buying. So you get this across the board sell off. Now, what I think may be helpful to mention, even though this will be a short sector situation, is financials, right? They really, of course, took it on the chin. And other things did as well that got pretty roughed up. For example, healthcare got pretty roughed up. You can see the RSI readings are among the worst of these 12. All of them are either approaching oversold or in oversold, but real estate naturally got spanked really hard as well. So what I would say, the note I wanted to make on that is that depending upon how this plays out, does it play out with a couple more days of weakness? Does the Fed manage to do something on Monday? Do they even get something going before the opening on Monday? These are things we don't know. And this also will prove to you, I think, from looking at this, that at least temporarily, news can really derail really good looking charts. So XLI was acting well But you could see, right, that got derailed, as we already noted, completely. I mean, it really got taken apart in a short order. But that's the thing. It may be worth noting that sectors that were formerly strong, if they feel like that risky situation has passed, they might come right back after these strong sectors. They'll also come right back after things like, which we'll show on here. I'll come back to SMH. But this actually, it's probably worth noting while we're here, this one also was acting pretty well and hanging in there, right? Even on Thursday, they were still trying to really rally this thing, and finally started giving up the ghost. So again, the selling spilled over even into semis, which had been trying to act immune to things. This one in XLI could be areas where you could say, well, if they start getting the market back on track, those are strong sectors, they might head back into them. But they also will try to get that trampoline bounce from things that have gotten smoked the most, right? In KRE, the regional bank ETF, this is one clearly that got smoked. Now you might say, oh, it's only 12 points or something, but if you could just see visually how much it typically moves versus how much it did move and how many standard deviations, right, it is to the downside relative to that trend that it was in, which is really more of a sideways consolidation type action. But the point is, right, if they feel like the worst is past and everything's getting back on track, they do try to come in for so-called bargains. So those are the ones that I would keep on your radar, kind of start making mental notes of maybe some names that you like in both spaces, if that scenario plays out. But I think I would be really remiss if I did not at least flash the SPY here, because what I'm thinking is at this point here and all the other major index ETFs we cover in macro measure, the bulls have lost control of them completely. At this point, the bears are completely in control. If the month ends ugly, the bears will be in control of everything. And that really isn't a good sign, right? If you're a bull. So, excuse me, just wanted to note that. And here I'm getting the little fight from that update that Microsoft, that little box that Microsoft puts in my way. But what I'm thinking is that you could have a couple more days, right, of weakness. Usually when you get into a couple really rough days like this, you get a couple more rough days. But at that point, maybe there'll be a solution. I don't know. We just don't know how it's going to play out. But I still think there's a lot of support. Basically every 1% to 2% down, there's really solid support until you get, I think, down to this middle 370 area. So I covered that in macro measure. I don't want to belabor that, but I do think that's where it is. And clearly falling below the bear market downtrend line and losing out on all the longer SMAs, pretty bad. Now, could this be a fake breakdown? Sure, I don't think it is, but it could be one. I just want to mention that. But in terms of getting, as people will call it, the shopping list ready, right? Think of what was a formerly strong sector, XLI, for example, SMH, for example. These really hung in there. So they may come back strong if they bring the market back. That would be that kind of more rosy outcome for a lot of people. But in terms of the other ones, it'll be the things that really got smashed hard, like we noted, KRE being one of them, and certain individual financials. If it's revealed that they're safe, everything's fine, they're not impaired, right? There could be a big snapback opportunity. So one thing I would share on that note is, I think you got to be super organized and ready to make your adjustments, and just make them with a plan, but don't hesitate for too long, because they can really quickly reverse things. And multiple times a day, you can go from bull to bear, big moves when it gets like this. So I do expect there to be a lot of volatility. And the final note I really should say is on things like this, things like the semis, for example, and well, really the market overall in a lot of different stocks, a lot of different sectors. I think a lot of capital, despite the bearish sentiment, got pumped into these areas. I think there was a lot of buying where people jumped the gun. We talked about this in macro measure at least a few times this year. And they got ahead of themselves in terms of, oh, this, we're going to come roaring back in the economy. That's not something Ryan or myself have believed. I think I've been pretty clear that my macro take is not certainly not in agreement with that. It's pretty bearish macro take, which I hope to be wrong about. But that helps me in a way because it keeps me grounded. It keeps me not from getting over my skis. It keeps me disciplined in my position management, especially on the bull side. I don't want to get caught, as an overly zealous bull in a market that still was leaving some questions, right? And I'm not completely convinced that we've moved back into a bull market posture, right? I think even if we had taken out, which I was hoping that they would, I'll go back to SPY, but even if we had taken out SPY at 431, something we covered many times, right near 431, had they been able to lay the bull trap from an even higher level up near here, I would have thought that was great. Now, some people would say, well, if you're taking out that high, then you're definitely back in the bull market. I think that's exactly why I think it would be a great trap if it had played out that way, but it didn't, right? We're losing the trend here at this point. So this is the trend we were in is really represented on the support by that line I just made blue that will now be orange again. And you lost that. You lost your 200. So things are really dicey. And naturally, as a result, the sectors that we cover, you went to this risk off posture and you just can't find anything that they didn't sell. They sold virtually everything. And like I said, some things got sold off worse than others. With something like XLI, again, on the RSI basis, that's hanging in there pretty well. Communications hung in there well on an RSI basis. Technology did, but eventually, right, if this sourness, right, these problems continue to metastasize, they'll eventually come for everything. The Reaper comes for everything. And I don't mean Kramer. I mean just the gang that is looking for something to sell on balance, right, and at the margin. So they'll start coming for things that haven't fallen if the market really craters and start selling them as well. So even things that were looking good could possibly come under pressure if there is a chance for a bounce, if that develops because there's Fed news. Again, reminder would be to, even if you hate listening to the talking heads, I don't blame you. I'm in your camp. You have a sympathetic ear with me. But yeah, I think you need to keep your TV on this week, or at least have something on somewhere on your computer where you're listening to breaking business news, because there could be an announcement. Again, I don't know what's going to come. There could be multiple announcements, and that could change the market dramatically. So just be ready for that. Be ready with your discipline. But look, when it gets risk off like this, there's really not much for us to say. I mean, I talked about the bounce back, but otherwise, right there, if this macro situation continues to get worse, they continue to sell most stocks, they will come and sell things like XLK more. They will sell XLC more. And this could create more of a panic. I'm really not predicting that. I spent a lot of time this morning researching so I could do some talking about these situations that are out there, but I had to cap it. It was hours and hours and hours into it. And I'm like, I just can't, there's no way I could fit all this into a couple of short videos. It's just too much stuff, unfortunately, but that's the way it is sometimes when you're near a crisis. But I think it's worth covering our extra sectors just to be disciplined ourselves. But here's SMH now. Why Thinkorswim move me? You can see the channel that I've got in there right now, and it's been pretty impressive. But look, it just kind of came below mid-channel and failed. And so it looks destined in a heavy market to at least trade to the 50 there in gold. The 50 is 233.80. So that's down like another % plus. Here's your support line. And that support line here, which I just made blue, which I'll now make red, that dovetails with this flat line up here by the time you get there. So I think there's a reason why I've got that blue line there. You can see that price really pivoted from that several times, got near there several times, and it's an important level. And that's maybe at, would you ballpark that at? That's right near 230. So that's down about 3% roughly from where we are right now. So those are your big nearby levels. And you can see that you've got a rising 100-day, a rising 50, and even the 150 and 200 respectively are flatlined, or at least trying to flatline a little bit overall as a pair. So we'll see. But I mean, breaking out of this channel to the downside, like we've seen other things do, clearly that would be a problem. These would then have to be the major line. And if they don't hold, then it's really problematic. Now, One thing I wish I had mentioned on macro measure that I will mention here is that if you're trading in something and you see gaps, the only time after 5 days go by that I really factor gaps in more heavily is when you're in a market route, and they're just selling everything. That's when you can see gaps that didn't seem relevant get closed quickly. Or at least get close to getting closed quickly. So gaps could matter in this, hey, we're in the third inning scenario of this route, and there's at least several more days of pretty ugly route to come. In that case, right, things can really get overdone. You might get some really extreme readings. So that would just be like another tip I pass along, and just do it here in SMH. Now, SMH still probably looks like one of the better places to be as a long overall, but the bulls are losing their grip on that as well, right? Slowly but surely losing their grip. Late last week, it took a little bit of an acceleration into bare hands. I still think there's more of a tussle going on here, so I wouldn't say that this is fully in bear control, but it could become that way, right? With another ugly week. At that point, you'd probably be really oversold though. So you'd probably be looking for like a reflexive oversold bounce at that point. But that one still looks pretty good. I think if you want to look for strength in XLI is where I kind of home in on as a way to say, okay, what if they've been buying these before? Now that these things are down, what are they going to come in for again in the strength? So in other words, somewhere they were adding, they can add again, right? Add from a lower level and sort of chase it back up to where it was. Those two really come to mind. Now, XHB, we've been covering that. XHB, this is one that kind of had us scratching our heads for a while. That channel too looks vulnerable, right? So that could finally start to catch down with reality. There's one with a gap, right? So if we do go into a real rout, I'm not saying we will, I'm just saying if we do in that scenario, things like that gap can actually matter, where you're thinking, oh, it doesn't normally fall that far in just 1 week. It doesn't normally do that. But when you get into these extremes like you did there, look how quickly and how far that fell right there. That's really dramatic, a really dramatic drop over the course of about 5 days. And that's what I'm talking about. You could get a really dramatic drop. You're only maybe like a day into super dramatic dropping, right? So just kind of keep things like that in mind, but hard to like that, right? When you're breaking down below the correct, I think what will ultimately be a corrective uptrend. I don't think that's going to be the resumption. You don't want to rule things out completely, but I just don't see how that works, especially it will now make sense for us to maybe jump over and look at the lumber futures. And here's the March futures. Let's see. And you can see these things. Oops, didn't give me there it is. Yeah, I mean, you can see where that is, right? So again, I don't see how things are wonderful there, given what's going on with rates and the rest of it. Housing prices, I don't see how the demand is anywhere close to what it once was. So I think that all kind of makes sense to me. It's nice to see something make sense to you here and there, where it's not always a head scratcher, but it is at times. And that's why I would just go with the charts, because they can keep you scratching your head for a long time, and you sit it out, you miss out on a lot of opportunities. So once again, I think it's just better to embrace the trend changes, intermediate term trend changes, and embrace your momentum and try to work with it, the best you can. This is pretty much a key level, I think, in here, right near where we are in copper that we're looking at. So this one too is correcting. This is on a support line that I could probably just kind of pirate here and drop across here and then move up a little bit. So let's do that just to be a little bit more, and you can see it right about there. So right about there's where I'd kind of ballpark support right now, and it's right there. And unsurprisingly, you've got a flat line, I think, near there, and you've got this line, another one where if it drops, you probably come back to where this breakout really started to go, which would put you between the 100 and 200. But yeah, I mean, that's not looking good. That's not a good economic sign. theoretically. Now, another important area to check out to kind of go along with the XLRE, we could take a look at the, I think we had the IYR maybe. Yeah, there's another one, and you can see this does not look good. So there's a look there. I mean, you can see the channel we had in there, and this is the old, again, breakdown, try to get back into the channel, fail, and roll over again. So standard issue stuff that people love to see. It's telling you that this channel that you were in is legit, and therefore, right, this corrective phase seems to have run its course, and you're on your way to another bear phase, theoretically. So we'll see on that, as always. Trying to think. Oh yeah. So let's take a look. Let's take a look at the let's take a look at oil. And this has been a tough trader. Now, I've been saying it for months now because of that action, and it just keeps oscillating back and forth. And every time it looks like it's ready to go, it puts a little pop together and fails. Every time it looks like it's ready to drop, it does a little, and then just gets truncated and it's over. But that's certainly not what you'd expect if there's this big, right, to look at, if there's big worldwide recovery on the way that some folks have sold us. This market isn't sniffing it out. The other sort of commodities markets we've looked at aren't sniffing it out. What does seem to have ignited a little bit, though, due to this banking system issue, is the metals, the precious metals. So they've been struggling overall lately after having a good run, and that almost looks like a double bottom attempt, but it's too early to say. There's a gap down here, so I don't know if I'd get too over my skis about that either. I don't want to. Oh, boy, it switched over to percent on me. So frustrating. I don't know why it keeps doing this to me, but it must be something that doesn't like. But that's pretty far down there. We've noted that before. So yeah, I mean, if there's a whole nother leg down, there's a whole nother leg down. I welcome that, even though I'm long the physical. But yeah, I mean, this right now this is a tough one because it's trying to double bottom. Maybe you start seeing more of a bid because it's people looking for some kind of a hedge, and they're panicking, they're worrying. They see more risk off. They see maybe things coming under assault. Now, interestingly, SLV and GLD, we did see some attempt in these to move back up. So SLV moved up a little bit, and then there was some paper. I think we might have had some paper in there, maybe GLD. In terms of UOA, I don't think it's not really an active idea in the UOA Pro. We did see some paper in there, and you can see how they responded. So might be worth keeping an eye on those because they're both trying to churn. And certainly the macro situation that we're in right now, or we appear to be in right now, sure could help support that kind of flight to some metals buying. So just keep an eye on those for that reason. If we continue to, if the banking question becomes the banking sector continues to be questioned, and the value of the stress tests continue to be exposed for practically being meaningless, then yeah, you could have a situation certainly develop there. And I wouldn't be surprised if they try to come in for these now. Just been such a hard area because, well, you probably know that JP Morgan is bidded to manipulating this. Their traders got called out on that. There was something made of it, but it's always minor compared to what it really should be. Another thing is sector situation. We do typically do this in macro measure, but the VIX really started to go, and so we'll see, right? That's finally something there. So that's telling me the market's finally taking risk a little more seriously, right? Or there was some insurance that was bought and hedging that went on, and options demand naturally went up as a result. What else can I share? Yep. So what else there was one more I wanted to cover here. What was the last one? Oh, that's what it was. It was just the yield, just to make the point for yields that, that this just kind of confirming your risk off where folks were heading into the bond markets and buying bonds and driving bond prices up and yields down, or so it seems. And so the 2-year, the 10-year, both things really had some pretty dramatic movement. Again, just kind of confirming that risk off situation. So out of the sectors, I think the big message is really you're looking at a lot of things are confirming that there's no great economic situation, right? They suggest there's no great economic situation developing where these commodities are really in high demand because everyone's expecting things to go gangbusters. It looks like, to me, at least with my opinion weaved in, that the housing sector certainly is finally coming under pressure. And I think that, to me, again, makes sense. You look at lumber, the oil sector is still, energy is still a mess. It's just not easy to trade right now. I've tried to put a couple ideas in there here and there that look good at the time, knowing that they could really be upended quickly because that's been the pattern. And a lot of them either got started and fizzled or were on the verge of getting started and just couldn't do it. So it is what it is, but they're selling off so many things and they're moving into safer things. And I would wait, like if you see more cratering that's out there, you could go back into maybe the semis area, maybe the industrials area if you're looking for strong areas that could resume. I don't think that's the way to go. I don't think that will be the way to go because I just don't think that we somehow magically reverse right back to believing that there's this pivot's going to happen and so on, and that's going to be the magic tonic. I just don't think it will be. I don't think things are very good out there overall, but again, you never know. This is just an opinion. Another thing, just be right, anything that's gotten cratered, right? Super cratered, something like a Schwab. I don't want to talk about these. We talked about the macro measure, but I didn't even talk about all. We had so many financials that we were fortunate enough to find put side activity on and decided to put bear trades on in there, and they were just incredible drops that we saw, which was good for folks that got involved. But things that have really got smashed, if it's revealed that they're really not at death's door, right? They'll try to come screaming back after them because remember, before this, they had this stock priced near 80, and now the stock got priced near the mid 50s. So that's really, in their minds, right, would be a great buying opportunity, a great discount. The stock is on sale, that kind of thing, and they can come roaring back quickly. So look for that if there's some sort of paper over that the market, of course, wants to believe by, I don't know, the Fed, the powers that be. I have no idea other than to tell you to expect volatility this week. I have no idea what else to say in terms of the fallout because I think it's probably, to me, like it looks like it's going down further. But at the same time that they come out, we know news, if they come out with something, news can trample right all over technicals, right? So it's just a big shift. It happened really last week. The technicals were hanging in there, and then the news hit, and boy, that was the game changer. But I think those are just some good things I can share for now. I think looks like rough sledding to me. I don't see anything good in the commodities area that's saying, yeah, we don't even have like a bottoming out pattern yet, I mean, and a momentum reversal. So things are just looking really rough and across all this stuff. So it's still more macro picture risk off in my mind. And, you already know what sectors to keep an eye on for one thing or another. But if this does spread out, I still think that the real estate and the housing sectors could continue to go because I think that's been, those have been, in my mind, like mispriced far higher than they ever should have been. So that would be maybe something else I could share. That's just more of an opinion, and the charts do not look good, but that's just more of a combination opinion and the charts not looking good rather than something that the charts exclusively are showing to me. And the charts just don't look good, but I don't think they suggest anything that's extreme yet, right? That you're about to really give out and take out this multi-year low or something. And now you're really in trouble. It could happen, but I mean, you've got to fall a decent amount further. You've got to fall another 10% before you're even thinking about that maybe being really doomed. So that's why I'm not going super apocalyptic just yet. But Yeah, I think this is my best tip for the week. Expect volatility and have a lot of your orders ready and out there in a disciplined fashion, because it could be so volatile, could be during a phase like this, that you need to be out there and you need to just get your reports and move quickly, because things are happening so fast if you're carrying, say 10 positions or something like that. So you don't want to get caught without a lot of your adjustments. And I would be a very aggressive adjuster and be disciplined. And you'll look back and you'll say, oh, I could have made more money had I done this. You can always say that, though. What will be important if that kind of scenario plays out is that you hopefully did quite well, regardless of not being perfect, which is, again, is very hard to do. So hope something I share with you helped you out this week. This is relatively short because of the situation where we've been here before. And maybe it'll help you this week, something that I shared, or in the future. But thanks again for tuning in, and stay nimble out there would be my best closing advice on that. Thanks for tuning in.